Good morning, good afternoon, good evening, one and all, and welcome to the first December edition of Smoking Barrel. Rustin Edwards, based in Geneva, with my illustrious world traveling, miles accumulating, jet stomping co host, Mr. Matt Stanley. Welcome back
Hello.
from the rest of the world.
Hello. I brought back COVID with me. Remember that? COVID. Jeez. But no, yeah, look, sorry, it's been a few weeks. Where have I been? I've been London, Indian Ocean. I won't tell you where. Um, China, Bari week, which was by far and away the most, the wettest of weeks that I've had over the last few weeks. And then I was in Perth with some mates and a bit of business, for the Ashes. England, Australia. Well played, Australia. Play some golf, play some good golf, play some shocking golf. But a very nice time was had. But fear not, I'm here for the Christmas period, and the travel doesn't start again until my wife allows me my passport back.
You've been gone so long, the plant behind you has grown.
Yeah, there wasn't even a plant here before. I think it's come up through the floor. Gotta give something back. All the gas that's talked in this room. It's got to be something that offers a bit of balance. But no, good to see you all. When did we last speak? When did we last
Oh, it
air?
was well over 5 weeks ago.
Wow. Well, let me share my screen because we can talk about where flat price is. I mean, I put something on my commentary because you're all reading my commentary, aren't you? Because do you know what? I get more comments on my commentary this time of year because why, Rustin?
Oh, the Christmas cracker, which are cracking great jokes.
God alive, they are groaners. But let's start the smoking barrel with today's Christmas cracker, shall we? 4th of December. Why don't you ever see Santa in hospital? Because he has private health care. It's just show if anyone who doesn't laugh at that is dead. They're dead. But no, it's that time of the year. Well, I've got my Christmas party tonight. I'm not. I mean, I will drink my way through it. But that will be okay. Where am I sharing? Where am I sharing? Hang on. Is that the right screen? Nope. Let me share the right screen. Share. I think it was that flat price that you just saw.
Yeah,
Okay. Okay. Instead of me sharing my WhatsApp chat with my wife, which has happened in the past, let's have a look.
that could be
Right. So,
embarrassing.
yeah, well, for her. I think I think we were around here the 29th of October, about 63, just over $64 a barrel.
Hmm.
Um, and where are we now? 62.85. If you look at the range, and this is what I think what's the name's oilprice.com. They called it the most boring month in years. I mean, you get all those degrees in journalism and English language and English literature, and that's the best you can come up with. The most boring in years. Anyway, they're right. They might have a point, but you see where the range was for November. We started at 65.32, and we traded down to a low 61.60. That was an aberration though, because we closed at about 62 and a half. Narrow range bound. Gas oil still doing bloody well, as are cracks. They're coming off a bit today. But yeah, look, the whole complex. What we've been talking about for the vast majority of the year, Edwards, is that gasoline, gas oil keeping anyone in the energy space well supported, it seems.
Well, that is the case in point. I mean, if I think you have all the stories about the crude stock builds on the water, massive stock builds in 2026. If you average the IEA and the EIA's numbers, it's roughly about 3.2 million barrels a day of stock builds for crude. Yet
Yeah,
the market is still stubbornly stuck in a backwardated mindset, and I think that is all being driven by the prompt refining margin, as well as the market still trying to shake out where logistic flows need to go as the improvised European, I think, Stage 19 sanctions come into play, which bans Russian origin products or products derived from Russian crude if you're not from a major exporting nation on January 21st of next year. And you've already had moves by the ICE to ban Russian produced oil from the ICE gas oil delivery window. And I
yeah,
believe Platts is also discussing about the same thing in the ARA window. And so you
yeah.
end up with a market that has a strong front end crack, which is in turn driving crude demand from non-sanctioned sources, which in turn keeps the backwardation where it is.
Well, this is the thing, isn't it? My colleague George wrote about this, and I raised it to a few of the salespeople at Kepler yesterday. George goes into a lot of depth here. Correct me if I'm wrong, and I'm not in Europe, Brexit. Um, uh, ICE has confirmed the new rules for the implementation of the sanctions on Russian-derived gas or whatever you want. But have the EU, have they actually come out with a set of rules that enforce and how they're enforced on importing a cargo that's come from a Russian-derived crude?
Yes, yes, they do.
And what are those rules?
So you need to have a firm provenance of the crude oil that's gone into the refinery if the refinery is a non-exporting nation. So what's derived as a non as an exporting nation? The Middle East countries that are OPEC members. So they can theoretically take in Russian product and export it because they're exempted from having to prove provenance of the product that's coming from their refining systems. But if you're a country like Turkey or a country like India, you as the transporter of the product have to show certification that the refinery was running non-Russian crude to produce that product.
Okay, okay, and okay. So you sell let's say you're an Indian refiner. We shall not name names for sake of being sued. It's Christmas time. So be nice. Let's say you sell a car, an LR2 of gas oil into Northwest Europe that's loaded out of Jamnagar, right?
Yep.
What documentation do you need to prove where that cargo has come from?
Yangamar needs to have proof that the crude oil that they used and given it to the person who's selling the gas oil, that the crude oil that was sourced and used to process that gas oil was not Russian origin.
Okay, but what is that worth? Like, okay, here you go. Here's your document. Go on, go and
I,
sell
I've
it. Like,
I've heard that is about a $20 spread.
well,
At
yeah, of
least,
course there is. But practically, from a documentation point of view, not that I'm saying that people are going to do this, but like, okay, so the EU get this document. They're like, okay, that's fine. I've got this document. Is there an audit trail? Is there like, I mean, how is it enforced? Because anyone can just give a document. So how does that work? That seems to
yeah.
be a
So
little.
if you're the receiver of that product, you need to be comfortable that you're receiving a product that's valid under the EU sanctions regime. Otherwise, you could be held liable.
Okay.
So
See,
if you're
this
not
is the
comfortable with the origin of the or the documentation you receive, you're not going to buy that product. And so you do see price breaks between non-sanctioned locations. So, for instance, United States has a full waiver. All product from the United States does not need to show any type of documentation proving provenance. So, any gas oil cargo from the U.S. coming into Europe, happy days, free flow, let it come.
okay. That's
But
fine.
but if
I
you're coming
understand.
from Turkey or from India, and you've been running Russian crude, you as that Turkish refiner need to provide enough documentation to your buyer who's going to transport that product from Turkey to the EU that that product is not sourced from Russian derived crude or not derived from
This
Russian crude processing.
It just sounds like an absolute cluster waiting to happen. Okay, next question. What stops someone discharging the gas oil into Fujairah, blending it, and then selling it into Europe?
That's the thing is that if you're in the EU sanctions, if your country is a exporter of crude oil,
The UAE? Oh, Fujairah's in the UAE.
yes, then you are exempt from that requirement.
So all okay. In theory, I've got to be really careful here, and I'm not very good at this. In theory, what stops Fujairah being a conduit for all that product going into Europe?
What stops Saudi Arabia? What stops Kuwait? What stops Iraq? What
Right.
stops
Right.
Libya?
Sorry. Did you just answer my question with another question, Edwards?
That's
What I mean, apart from where
the
it
great
sits on the moral
Socratic method at work.
But apart from where it sits on the moral compass and what his Donald does about it, what does stop that?
Um, I think it's gonna. So if you are allowing a cargo of Russian gas oil to deliver into a OPEC members terminal, okay, let's paint a big broad brush because OPEC, all the OPEC countries are exempt from this requirement. Doesn't
Okay.
matter if it's Nigeria, Libya, Algeria, okay?
Algeria, Algeria is an interesting one, right? Sitting on the med.
Yeah, same with Libya, sits on the med.
Right.
And there's already a lot of rumors of Russian product going into Libya and coming back out as Libyan. Um, but
I
nevertheless,
don't even
if
want to
that's
look.
going on, it's going to come down to tracking those ships, and you now almost have to have a voyage booking of, okay, ship A came in, discharged, and then ship B came in, picked up a cargo, went out. But trying to prove what are the molecules on that ship under that sanction regime, I think it's going to be nigh impossible.
Okay. Okay. Look, in danger of putting my feet in my mouth, which I have been guilty of in the past. The Nayara refinery in India, Vadana refinery, 400,000 barrels a day. It's now, like you've always said, what's your favorite quote from Jeff Goldblum?
Oil will find a way.
And it is. Rosneft-backed Nayara refinery covers crude imports to pre-sanction levels. Now, if we look, I'm not here to opine, well, a bit. I'm only here to report on what the data we're seeing. So let's have a look at this. I didn't write this, by the way, or write this program, so blame them. Let's have a look at the Vadnar refinery. So this is where is it? Well, we haven't got a capacity in total. Hang on a sec. Runs. Let's go through runs. You can see this all right, yeah?
Yep.
Okay. So November, 405,000 barrels a day. Let's go back over the last year. Come on, she's slow today. Probably the feds are listening. Hope not. It's bringing up what's happened. Okay, there was a slight dip in September. We went down to 337, but it's been remarkably consistent, 446 runs a day, right? Let's do that over, 'cause that's a lot of data. Let's do it over the last 3 months, and let's split that by crude grade. 377,000 barrels is euros. Now, you would think there's nothing stopping the Indian government running Urals crude, right? Cheap feedstock, and using it domestically. All those products stay within India, and it's
Well,
a cheaper.
there's no product there's no reason why India can't run Urals crude and export to other countries not inside the EU or US sanctions regime.
So what about Brazil?
Well, Brazil is wide open, in my opinion. I mean, unless
Are
Brazil's
they a member of are
affected.
they a member of OPEC?
No, but they are a major exporting nation.
Okay. Right, okay, this is where it gets a little less. I hope anyone I'm offending, I'm sorry. I love you. It's Christmas time. Feel free to not write in. Let's look at Brazil, gasol and diesel imports, and then let's split that by origin countries. And let's go back 2 years. Now, Russia. Let's actually go back. Let's go back to when did the right special military operation commence? About here, right?
February of 22.
Right. Okay. Okay. Can't do that. Let's just do 5 years. Okay. Let's look at Russia. Right. So before end of December. Where are we here? Feb 2023. Russia was supplying that into Brazil of gas, oil, and diesel. Before, the vast majority of suppliers was the US. And you can see market share drop off at the same time that Russia picked up. Now you can see as well that linear it's kind of been steady, but the last few months it's dropped off, and the US has picked back up.
Well, I
India,
mean,
you, you can see zero, but okay. So if we go to this chart here, yeah, 109,000 barrels a day. Let's do that in KT. 450,000 tons of 30% of Brazil's diesel imports came from India. Let's see where. Jamnagar, Vadanar. So Nayara have picked up, okay, majority is coming from Reliance. This is September. We see that actually this is going to, fixtures from Vadanar are going to really start picking up. Okay, now this is where we get into a really dangerous area because if that indirectly affects the US oil infrastructure because the refiners in the Gulf Coast are not selling into Brazil as much as they were. You can see that the market shares dropped off. India are because they're selling Russian-derived crude oil products to Brazil. Does that not circumvent what the Donald's trying to do? Surely it does.
Well, I don't know if I'd say anything that the Donald is trying to do. I think the United States, I mean, you've had the great redirection of oil flows. So when Russia was banned from Europe in the winter of 2023, which is when you saw that big influx of Russian gas oil into Brazil,
Yeah.
what happened? U.S. gas oil went to Europe. So the market just rebalanced and redirected flows to meet the most expeditious outlet for the oil. And I think even here with India, you'll see, okay, India needs to find places to go with their oil. Okay, India has sporadically gone because it's a very long haul flow.
Yeah.
And if they can make that work, then they have to be price competitive with what you have from the local market supplier, i.e., the United States.
Yeah.
And so if they can underprice the US, okay, yeah, things will flow from India into Brazil. I think the problem Brazil will develop, though, is going to be around the financing of that oil. Because if they're using US banks or EU banking, the EU banking won't touch it without the right provenance. So,
But it seems like there was an article on Bloomberg, and I'm throwing everyone under the bus today. There was an article on Bloomberg where they mentioned that some Indian banks, if the route and the structure is set up clearly, and a lawyer spent a month going through it and saying, you're not breaching any sanctions rules here. Rosneft own half of the Vadnar refinery. They can run Urals. The
but
product,
wait, but they're fully sanctioned by the United States,
right?
Rosneft.
Yeah.
So that's where your problem sits.
Okay.
Is
So
that
in terms of getting
no
payment,
banking will touch a Rosneft oil cargo.
what about an Indian bank? Did
Well,
in Yuan or
India is
dirhams?
India. I mean, India, but if an Indian bank has any type of U.S. exposure, then they will no longer be able to transact in that barrel. They'll have to either sever their U.S. ties fully in order to finance that cargo flow.
Okay.
I mean, so that's where the oil that's on the water that had delivered, if you looked at your chart from Vandenar, that probably had delivered because that probably was under the delivery window, or they have a export license to bring it in. But after that, I think it'd be very hard for Vandenar to actually move oil to Brazil because of the sanctions on Rosneft.
Uh, okay. Look, you and I have been around long enough. I'll be 26 years in the oil industry next year. How many years will you be?
Um,
More.
well, you take the time sailing on tankers, almost 30, but hey,
Okay.
who's
So
counting?
50 plus, half a century plus of experience in oil markets. This isn't the first rodeo we've seen where the structures were set up to bypass sanctions, but I just feel like these sanctions are more stringent and enforced than any other that I've seen.
Well, I
Would you
mean,
agree?
the Lukoil and Rosneft sanctions are probably far more damning than anything the EU's put together. And I'm only going to say that just because when you're actually hitting a major refinery and a major oil producer of the Russian Federation and internationally, you start impacting a lot of markets, not just one market. And so, you had the recent story with Luke with the Iraqis looking to transfer ownership of the Luke oil concession to Exxon,
Right. Yeah,
as an
yeah,
example. Chevron, same thing. You have ADNOC stepping in to take control of some of the Luke oil refining assets in Europe.
yeah.
Same thing with SOCAR. So, I mean, you've got a lot of places that are now working with other national oil companies or other major oil companies to keep these systems running. But nevertheless, that's been far more effective because the U.S. sanction regime has a lot more pull than what the EU's putting together. Because the EU has never really, at least at least as far as I've seen, has never really gone after anybody for sanctions. The United States has and continues to do so.
Yeah. It's a good point. I mean, look, okay, we could probably debate this, and I think the market is as well all day. I want to talk about what all this means on how to trade and position. So, oil on the water builds, that's all really people have been talking about. And it's very linked to what we were just discussing. So, we've seen 215 million barrel build oil on the water since early September. Now, just have a look at this. I want to focus on this one. Oil and products on water build since September. Here's your crude number, but here's your product number. I mean, I, what the only, to me, the only sort of outstanding matter in what's happening in the market right now is if the US managed to broker a peace deal and divvy up the land or whatever they want to do, Russia and Ukraine, that frees up the possibility that sanctions relief will come in maybe 2 years. I don't ever see Russia selling to the vast majority of European countries before. There was an article yesterday saying that the EU have devised a plan to phase out Russian gas oil supplies entirely by 2027, which is
Nat
only
gas,
a
nat
month's
gas,
time.
nat gas.
Nat gas, sorry. Nat gas. I mean, this is what is keeping the whole oil complex supported. Do you think a ceasefire is announced? These start doing this. Will continue on the same trajectory because there's just simply not enough people to buy as much crude oil as in the market right now. Is that is that the catalyst to sell flat price?
Well, I mean, I think that if you look at where crude stocks are right now, and as long as you have a strong refining margin, I think selling flat price, you have to have an offset to it. You just can't sell it naked. I mean, to me, it's almost like if you wanted to be protected, you almost want to be, long structure of product versus short structure of crude,
Right, so the
like crack
box.
boxes.
Yeah, exactly. That I mean, that does seem to be the trade. I know someone who was trading Q4, Q3 gas or crack boxes. We're getting very technical now. We're not getting all old man kind of weird. A crack box is a thing. Trust me, people. Um,
And
but
just
yeah,
to explain, a crack box is where you're long the product and you're short the crude, or vice versa, and so you're basically long a front end crack and short a back end crack, creating a time spread between your crude position and your product position.
correct. And a box, exactly that. A box is a spread of a spread. So that's what people are doing. I don't know. Look, lots to discuss, but I think what does it manifest itself into? A pretty range bound, low 60 environment, crude, OPEC bringing back oil, pausing it a little bit. If you look where we were this time last year, flat price Brent was trading at just about $73 a barrel. So it's
Yep.
been a slow grind down all year. If there is a ceasefire, I think we get to the mid 50s. I really do. And I think that OPEC will react. And I think we might stay around 55 to 60. I think that'll probably be the new range. But I think in an environment where the ceasefire talk is still a long way away, um, I would say we'll kind of flirt around these levels until the end of the year, which isn't
Well,
long.
I would say that we're probably going to keep grinding lower. I think a break below 60 is in the cards. I don't know how and when that would happen, but I still think it's in the cards, especially as you get into the low liquidity weeks of the Christmas holiday parties. I mean, one thing to think into consideration is that, from a long-term time spread on the market, we're basically trading where crude was pre-COVID.
Right.
Uh,
So the last 5 years has just been a bit of a waste of time.
Well, the
Like,
last 5 years, you had the rally from the low of COVID all the way up to the spike from the Russian invasion. But for the most part, the markets have been trading right around 65, $70 a barrel on average. And when you all the way go back to 2017. So are we kind of in where the natural balance of the crude market sits? I would tend to agree we're in that sweet spot almost.
okay.
Um,
I mean, look, I mean,
because
here's the thing, right? And we'll do a review of the year later on because I'm around, so we'll be recording more, and we will be consistent. It's my fault, so I will take responsibility. I think next year, the second half of this year for me, what has dominated apart from sanctions, tariffs, enforcement of the same, I think what has dominated the headlines for me has been people are now in Europe, especially, are starting to feel the pinch of a lack of investment in fossil fuels. And with the number of refineries that are closing in Europe, with seemingly no one willing to step into any shoes. Europe becomes the world's biggest short, if it's not already, over the next 10 years. And I would argue that what's to stop gas oil strength? I think the Russian issue is still there. I think refineries going down and turning into tank storage terminals. That will be the way that things are going. And I think the first half of next year, IP week, I'm hoping they bring back the P in IP week next year because it is all about petroleum. Sorry, Greta. I think that that will be front and center in a lot of people's mind. You got new refineries popping up in the Middle East, new refineries popping up in Africa, in Asia, haven't disrupted S&D balances to the extent that people thought they would. Europe is going to suffer, and I think that that will dominate headlines in 2026.
Well, it's been the full investment profile of Europe to go to the green agenda versus petroleum. I mean, I was having this discussion earlier today where if you take a look at all the potential energy reserves that Europe has, Europe could actually be energy self-sufficient if they decided to actually drill. They have nat gas that's untapped. They've got oil
Yeah.
that's untapped. But they refuse to do so because they've invested fully in the green agenda, and therefore, they're starving themselves of their necessary means. I mean, the plan prior to the Russian invasion was to use cheap Russian energy to help us bridge the gap to where we can be fully non-petroleum by 2050 and be fully on a different type of a plan. But
Haven't BP started laying that path already?
well, all the oil majors were down that path, and then they've all reversed it. I mean, if you
No,
look at
that's what I mean. Haven't
yeah,
BP kind of not gone back on that because it's still got obviously corporate responsibility, still one of London's biggest names in the FTSE 100. But recently this year we've seen BP talk about recarbonisation as opposed to decarbonisation.
well,
I know we've spoken about
BP,
that.
Shell, Exxon, Chevron have all made those statements to revert back to their roots because petroleum is still the easiest, cheapest BTU that you can transport readily around the world to meet the energy needs of people. And green fuels are very expensive. They won't ever come down in cost because the energy necessary that's green to power the production of green hydrogen to make green ammonia and green methanol for transportation needs, you've got this nice competing factor of this little thing called AI, which also uses a lot of energy, but
Right.
has far higher revenues and it's realizable today versus the potential for a green fuel in the future. And so when you have that competition for your green electricity, who gets to win? It's going to be the one that can monetize that green electricity today, not the one who's going to monetize it once they have enough ships or enough trucks or enough this, enough that built to actually utilize that green fuel.
I mean,
So
look, it's a couple of just before we go, a couple of stories on that. One, I'm watching the fallout of Petrofac. I think that was quite a big, for the sort of energy infrastructure. They're one of the big sort of service providers on rigs and upstream assets, and they went into administration. But there's some restructuring going on in the Middle East. That's one to keep an eye on. The other one, to me, really interesting one, was the JV between Shell and Equinor on the North Sea. I
yeah.
think that's what you're talking about. I think that that could be, is that a new entity they've set up as an SPV to bypass existing EU bureaucracy
Well, and
or
remember
what?
that Norway is not part of the EU. Norway is still outside the EU. So Norway is to me is a shining example of what you do with your energy reserves. You develop your energy reserves, you use them internally, you sell them externally, and you fund your government and you
And
fund
then
your pensions
and
and you
then you tax
fund
people
your health.
70, yeah, tax people 70% on the back of it. Yeah, thanks very much, Norwegian.
Hey, but you know what? When you've got a sovereign wealth fund where everybody has about a $350,000 piece of it, not a bad thing to, okay, tax me 70%. Have a nice day. My retirement's secure.
Okay, all right, Ebenezer. All right, look, good to see you. We'll be back next week. Season's greetings. Christmas party tonight. I don't feel up for it, but cider will save the day. Flat price exactly where it was half an hour ago. So boring as balls, I think is the official term.
Well, I mean, we'll see how things develop here over the next couple of weeks. I mean, peace plans, they seem to be talked about. Market gets all frothy, and then they fall apart because, as of right now, unfortunately, it doesn't look like we're going to have any type of peace anytime soon in Ukraine.
No.
So that's going to be a downside of it all. But, nevertheless, from the other geopolitical standpoint, Venezuela is the next big flashpoint. Do we see something kick off there? I don't give that a high probability, but you never know. The Donald could
Yeah.
become a bit more aggressive in Venezuela, which could support the markets even further.
Yeah. One to watch. All right. Good.
All
Good
right.
to see you. I'll see you next week.
Well, thank you all for tuning in. Catch us on Spotify, LinkedIn, and YouTube. And we'll be back next week with another fun-filled, exciting, pontificated episode of The Smoking Barrel.
Ciao.